Today we'll talk about Warren Buffett's investment rules which made him billions of dollars. Hi, I'm Henrik from Value Investing. In this video I'll describe what Warren Buffett has to say about each step of successful investing that I learned spending years. Just make sure you subscribe to this channel if you want to expand your investing skills, and also if you prefer to see subtitles, they are available. What is successful stock investing? It is when you buy a stock, wait for it to rise in price, sell it, and repeat the same process over and over again with minimal mistakes. So there are 4 steps for successful investing: buy low, wait, sell high, and repeat with minimal mistakes. I know that I didn't say anything new to you, but let's see what Warren Buffett has to say about each step of that process. So let's start with step number 1, buy low. The main questions of this topic are what to buy and when to buy. To be successful in investing, you should see yourself as a business owner. Your approach should be buying businesses, not stocks. Your main target should be companies that are easy to understand, have a competitive advantage, and a great management. Now, when we know what to buy, let's see how to understand when to buy a business. The main aim for value investors like Warren Buffett is to buy companies at a price that is way lower than its true intrinsic value. So we need to find the true intrinsic value and buy cheaper than that. Warren Buffett once said, "Be fearful when others are greedy and greedy when others are fearful." When others are greedy, the prices boil over and one should be careful not to overpay for an asset. And when others are fearful and prices of great companies are dropping, it may be an excellent value buying opportunity. By the way, smash the like button if you want to show your support to this channel. That will help the YouTube algorithm to rank our videos higher so that we can make more valuable videos for you. Step number 2, wait. As Warren Buffett has stated, only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. And Buffett's partner Charlie Munger once said, "You don't make money when you buy, and you don't make money when you sell. You make money when you wait." So waiting is one of the most critical elements in investing, regardless if you are waiting for the price to rise to sell your shares or you are waiting for the price to drop to add more shares to your portfolio. If you have trouble with waiting, forget about successful investing. Sometimes you should invest your energy in waiting to gain more success in the future. That's the rule of investing. Step number 3, sell high. The main question of this topic is when to sell. Although successful investment is when you sell higher than what you paid for, that doesn't really mean that you always can do it. There can be times that many fundamental things are changed in the business after you bought it. In those cases, we surely sell our stocks. Warren Buffett sells his stocks as well. Like recently it happened with the airline stocks. Warren Buffett has bought 4 major airlines, and after that the global economy shut down and Buffett thought that the usual ticket selling volume wouldn't be the same in the future and many airplanes will be parked for years. So he sold out all his shares, taking significant losses because the fundamentals of the businesses had changed. The reason why he had bought the shares no longer existed. So usually Warren Buffett sells his stocks in 2 cases: when business fundamentals are changed and when a stock is overpriced compared to its real value. As we all know, Warren Buffett once said, "Our favorite holding period is forever." So he doesn't buy businesses to sell soon, he buys companies to build wealth in the long run. Step number 4, repeat the process with minimal mistakes. Nobody can avoid mistakes, and even Warren Buffett publicly said in his recent shareholder meeting that investing in airlines was his big mistake. So the main point is to make minimal mistakes. What is Warren Buffett's strategy to make minimal mistakes? It is the margin of safety. Warren Buffett said the 3 most important words in investing are margin of safety. That means to pay less than what it's worth, a discount to the intrinsic value of a stock. And that's how he makes minimal mistakes. Warren Buffett is a firm believer in the margin of safety and has stated it as one of his cornerstones of investing. Another critical element to avoid mistakes is investing in your financial education. As Warren Buffett mentioned, Risk comes from not knowing what you are doing. He spends hours of daily reading and has done so for most of his life. He firmly believes that the better educated you are, the better equipped you will be to make wise decisions and avoid unnecessary risks. And as Warren Buffett's partner Charlie Munger advised, go to bed smarter than when you woke up. What's left to do for long-term success? It's to repeat this cycle over and over again, but before repeating, you must educate yourself enough. As Warren Buffett said, by far the best investment you can make is in yourself. By the way, if you are interested in options, you definitely need to watch my video about how Warren Buffett sells options. You just need to click on the card here to open the video. So if you want to expand your investing skills, make sure you subscribe and hit the bell icon to get notifications when I upload a new video so that you don't miss it. And if you could take any value from this video, please hit the like button and share it with your friends. Thanks for watching. Watch the next video.